So I'm going to teach you how to predict the daily bias. And the key to daily bias is you want to know the higher time frame order flow. Now, what does order flow actually mean? It means where is price actually trying to go to on the higher time frame. And the higher time frame is at a minimum the 4 hour, but the daily and weekly, they're the main higher time frames that you want to consider. So if you look on the weekly chart, right, this is the key liquidity pool that we're aiming for. And the reason why is you see how we've made these higher lows, we've taken out this liquidity, and we've not really respected this order block. So we're right there. So the higher time frame is bullish, but the thing you'll find with day trading, and this is so important to realize, is that to go up, let's say if we're bullish, price will often go down just to go up. Now, what does that actually mean? Let's get on the daily chart. So price does, I mean, if you've traded for a while, you know price doesn't just move in a straight line. Like from here to here, it's a bullish move. In fact, even from down here all the way up to here, it's a bullish move. Yet we always have retracements, right? Price moves in like a zigzag pattern. So as a day trader, when you have these little retracements, these are like large moves, like dozens of pips that you can capture. So right now on the daily chart, this is what we need to be focusing on. So we know in the higher time frame that we want to go up, and we can see bullish PD arrays. So we've got an order block here. So these are key levels that we might go to, right? So if we study carefully the daily chart, remember all we're interested in is the daily candle itself, right? This one here. That's all we're trying to do. We're trying to predict where is this daily candle likely to go to next. And what I found is that when I was day trading, the best time frame you want to use is the 4 hour chart, right? Because if you're on the 4 hour chart, it's going to tell you what's most likely to happen next. And look, you can see clearly we've got this low here. We've been going down, had a little retracement, and it's likely we're going to continue to go to this low. Now you'll notice this is against the weekly bias. And that's because, like we said before, price moves in like a zigzag pattern. And as a day trader, you're more focused on what's about to happen now. So for your bias for the day, you want to use the 4 hour chart because it shows the most recent price action. And so it's quite clear, right, that we're going to go down, that we're bearish. So once you've got your bearish bias, you now want to go down to, let's say, the hourly chart. And the hourly chart is essentially just like the 4 hour chart. I like the 4 hour chart because it's a bit cleaner. We've got these lows here. Let me just mark it out. That could be a good, intraday target. And then you want to go from the hourly chart down to the 15-minute chart. And this is when you start getting your entry patterns. So from London, which is 2 a.m. New York time, we've just gone down. Right now, like as I'm recording it, it's New York time. So we're likely to get retracement up to here, and then you want to continue it down. But you can use whatever entry pattern you like. So let me just go down to the 5-minute. Okay, this would have been the optimal trade entry, which is quite nice. So just a Fibonacci retracement. This is the type of trade setup that I would normally take. Enter in here, the light blue line. Let me just see how many pips this is. About 5 pips, 15. I always aim for a 3 to 1. So this is how you use daily bias to get your high probability setups. Use the higher time frames, and when you're trading like on the day, you're going to be really interested in the 4 hour chart. You want to find the key liquidity pools on the 4 hour chart. And obviously you need to know about different sessions and stuff. But here's a tip for New York, right? If you hit the key, let's say high or low on the 4 hour chart, just before New York will be likely to reverse. Whereas, let's say you still got the PD array, so we've still got the 4 hour low that's right here. It's likely to be a continuation. So, like I'm a swing trader right now, but if I was a day trader and I was trading New York, my entry would have looked something like this. Just a simple continuation. Now we might not get filled on it, but this is how you determine daily bias, and this is how you use any entry pattern that you like. But the entry pattern is the least important thing. That's what no one tells you about trading. The entry pattern is the least important thing. All you need to know is where is price likely to go to next, and just have a simple entry pattern. And then obviously you've got to manage your emotions. But if you can do that, you're a profitable trader. It's as simple as that.